Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 5th, 2025. Hope you guys had a great day today. So I want to go over the morning notes because I'm not sure how many of you guys, open, read them, jot down numbers, because what I do in these video reports, like the night before, it can totally change by the time we wake up in the morning. So when we wake up in the morning and I can see where futures at, I can see what the patterns are on the ES, I get a better, idea of what is going on. So what I put was that the S&P was up 9 points. While it has a positive tone, I lean towards the idea of any early strength likely to be faded or retraced. So let's go down to the next important one. For today, keep an eye on how traders react to 63.35 resistance pivot. If they get above it and the market accepts it, then the next upside target will be 63.67. But this is the important part. If we gap above it and it fails to hold, which is my preferred setup, I would look for a move coming down to the 63.10, 6300, and then below that 62.85, 62.70. So let's take a look at what happened. Here's the S&P, the open, hang on, where are we? Right here. So you can see, so we gapped above it, we went up to the 43, and then we hung out for about a minute, not that long, and then from there, actually, let me do this. I'll do it on a 5-minute chart. So here's our gap up. It lasted 15 minutes. It got above that 63.35, but then the market did not accept it, and look where it went. It went down to the 63.89. So pretty close to the 63.85 level. And then we just bounced around and closed down 30 points. Now, another thing I want to bring up is that the one thing that I've been kind of religious on, and I've been saying it really, a lot of it has to do with the overall general major indexes, S&P, Qs, and the Dow. But for some reason, sometimes the S&P and the NASDAQ run together, and then you see the Dow and the small caps kind of run together. Well, I've been leaning, I have not been shy about telling you guys that, since I really went market neutral when the S&P was at the 50, it was early, I know that, man. It was right around it was right around here, the 59, right around that 5,900 level. And it obviously went up. I was early on it. But what I said was I was not bearish on the markets. I was very skeptical with what was going on with the S&P and the NASDAQ. And I said I really switched my tone over to buying the small caps, because when the markets are flying higher, the small caps outperform usually by a 2-to-1 basis. But then there comes these times when the small caps get puked on, and we saw that really mid last week, and it was for really 2 or 3 days, and then Friday it got clobbered. But take a look at today. We have, that's quantum stocks there. So IWM. Today, all the other indexes closed red, and this was up almost 0.5%. So this is what I'm talking about. And believe it or not, the trades we made on this gap up right here was to take the 221 calls and the 220 puts. Obviously, that worked out really well. We made pretty good money on it. The fund itself, we did $865. It was it was a decent day. But my point is that the small caps, even though all the other indexes were lower, just that it did not want to go down today. So you can kind of see that shift going back. But again, if I see this market starting to roll over, which I think it's really, really tired right now. I don't think there's too many people that are too anxious to be jumping in, especially the smart money, the ones that have been long since the April lows for the S&P, and they don't need to chase up here, because it's a they've made the majority of the gains. So I was early on this gap up here, and we kept going. But again, if you go from this time frame, go to the May, right around that May. Actually, it was right around here. So in like June was when I was looking at it, and if you look at the small caps from there. So this. Let me just zoom this down a little bit, and we'll take a look. And let's just say, so it was right in this area here that it was where I got, I was market neutral on the S&P, and then we had that dip just like we had in the spiders here, where I actually thought it was a great call. And then we just shot higher. But if we look at that time period, you have the S&P that's gone up from to really, I would say it's close to 25%. When you look at the S&P, though, it went up, I think, 6%. So that's why I like to, when things are extended and you caught a majority of the move, especially from the lows to up here, and then it's looking tired because we started seeing these divergences. And when I moved over to the small caps, it worked out, really well. And I'm sticking with that game plan where, if we do see things roll over, and we really have to watch the S&P at the 6,200, because if these lows get taken out and it's accepted by the market where we get below the 61, say 50, 61.20 level, then, and it comes back up and it's used as resistance, I was telling the members in the premium report today that I'm not a huge Elliott wave person. I do know the very basics. I know I'm a little better than just knowing the basics. I know all the swiggles. I just don't like doing them. They're annoying. But some of the ones that I follow that are, they're one of the leaders in it. They're saying if the 6,200 gets taken out, that they're actually believing that these lows are going to get taken out. Now, I don't make trades. I don't do predictions or anything off of theirs. I just like to get a basic idea of what they're thinking and what they're doing on that. I mean, I personally think that we can see the S&P trading down at the 5,600, possibly even coming down and testing the 53. I don't know. They're basing this off of a really, really long-term Elliott wave count that I don't do, going all the way back from 2009. I don't do that. For me, I'm leaving this at where either we completed this wave 5 here, and I think that's what they're looking at as well, and why they're saying if we take out that 6,200 level, that's the important support. But like I said, I'm looking at this. There's support at 5,800. We got this support at 6,155. So, like I said, I just keep an eye on it. But I've seen a couple of them with the same with the same wave structure, and it's something I put in the back of my head. But in any case, so the 6,200 remain. This is going to be, I would say, 6,200, 6,150, because 6,200 we tested it, but we have the 50-day moving average right here. So if it comes down and it holds, I'm not going to sit there and say that, okay, that's we broke the 6,200 and now that's it, we're coming down. I want to see them break important support, which this is right here, where you can see this is where we made that previous high and then crashed, and this is where the moving average. So to me, this line right here, I'm even going to make it very big, and there, this is your important support. If it breaks this, that's when I'm looking at a move that will probably bring the S&P down into this 59.75 and probably even testing the 5,800. But again, that's down the road. I'm not really worried about it. I make my trades on a daily basis. But what I do is, when I just showed you before, the quantum stocks, which seem to be following the small caps, which makes kind of sense. But I mean, they did pretty well today. I used this. I had a tiny amount of some shares left that I was holding because I had some pretty decent sized positions on here. And so when we got the big spike up, and it was actually timed pretty good, because this is when RGTI was up here, is when I actually put the stop in at the for the because I have the RGTIW. I put a stop in. We got stopped out right in this area here. Pretty overbought, but this is the thing. We don't have any bearish divergences on it. So I'm leaving the door open that they're going to take this out, and that, you know, it maybe not. We'll have to wait and see on it, but it's a constructive pattern. Me personally, I'd rather see them come down and close this gap at 446 because I sold most of my shares. So let's go back to the S&P and figure this stuff out here. So, okay, here you go. We have this gap up. It failed here. If this is just going to be an ABC move, what we want to watch for a downside target would be somewhere in the 62.66, which you can see matches up. This is where the gap started. This is that support. So to me, this is an important line that we want to mark down and make it thick so we can all see it. And this is the width 3. Okay, so I can delete this out now. And so that's our downside target part. If that's just going to be an ABC move, ABC. And from there, if it, you know, then we start watching resistance, because if resistance holds and we start taking out the lows, then people are going to start looking at this and saying, wait a second, what's going on here? Every dip has been bid up for the last 6 months, 5 months, however long it's been. Now that's not happening, and that's why, you know, what I've been saying is, you know, greed, it comes back to bite you in the butt, and that's why I don't get greedy with things. I get out of them early. I look for other opportunities, but the thing is that, you know, when you have an S&P that goes from the lows in April and pretty much in a straight line, it's going to retrace, and sometimes it retraces a lot. And if we just did a 50% retracement, we're looking at 56.27, 54.37 level. So like I said, we have sell signals. I'm more than happy if this is not the low and it needs higher, that's fine. I'll move over and continue just to trade the small caps on the long side. That's all it is. So we know the important levels on the downside, the 6,200. On the upside, the bears, they really need to hold the 63.22 down. If they lose that, obviously we have today's highs. That's at the 63.46 level. And if they get above that, what we would be, oh man, let me see something. I don't have it. Okay, so basically what we would do, we want to just keep an eye on where we are as far as fib-wise, and I believe it's the 63.65 if my memory is correct. So here you can see we hit the 62% retracement, pulled back down. If it gets above it, then the 63.82 would be the next level to watch. And then support-wise, obviously it's going to be today's lows. Below that, then we're just going back to our line here. That's the 62.66. So below that, the gap's going to get filled, and then we have a chance of breaking these lows, and that's when things get a little bit, dicey for the bulls. So let's see what plays out tomorrow. Have a fantastic night, and I'll talk to you guys.